Good morning and welcome to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. Well, the holiday season is in full swing with the S&P 500 ending yesterday's session at a new record. The S&P and the Dow are both coming off of their best month of 2024. Well, in a week that will be filled with plenty of Fed speak, Federal Reserve Governor Christopher Waller said yesterday that he is anticipating another rate cut later this month, but expressed concern about recent inflation trends, noting that the progress may be, quote, stalling, end quote. Now, according to the CME FedWatch tool, more than half of the market is anticipating another 1/4 percentage point rate cut at the Fed's December 18th meeting. Let's take a look at what's on tap in today's show. It is Giving Tuesday. My colleague Trinity Chavez will speak with Giving Tuesday's U.S. and Canada director about the movement's rapid growth and the new ways that people are giving back to their communities this time of year. Plus, consumers were busy during Cyber Monday. In fact, Adobe Analytics predicted online sales would hit a new milestone as shoppers filled their online carts. The company's senior director of digital insights will join me with the latest figures. And later in today's show, I'll be speaking with the car coach, Lauren Fix, about incoming auto sales data and what it means for those looking for their next vehicle. Well, getting back to our main story here as we await the market open, that of course is stocks, something that we monitor closely here on NYSE TV Live. And this week's economic slate will be dominated by one item, that is jobs. Later this morning, the Bureau of Labor Statistics will release its latest job openings and labor turnover survey, better known as the JOLTS report. It's going to reveal the latest numbers of job openings, hires, and separations. Well, on Wednesday, ADP will release November private payroll data, which provides insight on more than 25 million U.S. employees. And on Friday, the Bureau of Labor Statistics will release its November jobs report. This data could impact the Fed's next move, with the central bank's next policy decision on rates just over 2 weeks away on December 18th. Well, joining me now with more on this and all things markets is Michael Musillo. He's the president of FBB Capital Partners. Michael, it's great to have you on the show, and certainly a lot riding on this week. How important is this jobs figure to the Fed's decision in a few weeks?
We think it's pretty important, Kristen. This is, remember, a few months ago, the Fed kind of shifted away from the inflation talk more towards some of their concerns around what was happening in the jobs market and the concern of the slowdown that was timed with that first rate cut in September. And then in the first week of November, the October jobs report was pretty abysmal. 12,000 jobs. I think the prior 2 months were downgraded or revised down to the tune of 100,000 jobs or so as well. And so their focus shifting from inflation back to jobs and what was happening there. We expect that to continue. Some of the stuff around the hurricanes and strikes, some of that stuff should fall away for most of November. So we might get some relief there. But I also think that the timing of some of the Federal Reserve folks talking about inflation again is interesting, which gives them a little bit of room to adjust. The market, as you said, is now factoring in this morning. I think it's 72 or 73% probability of another cut on December 18th, which is 2 weeks away. And that was about 60% last week. But they seem to be giving themselves a little bit of room here to say, well, not so fast. Yeah, we're focused on jobs, but remember, it's two parts of the mandate, and some of the inflation numbers of late have seemed to stall out as well. So we will see. Market participants are definitively going to be dialed into this, both the jobs report and then what the Federal Reserve does on the 18th. And then, we have a whole backdrop of Santa Claus rally, retail spending between now and the holidays, all those types of things as well. So
I do want to talk about Black Friday, of course, record sales, record online sales, nearly $11 billion, Michael, and the Cyber Monday figures coming out as we speak as well. Americans clearly are in the mood to spend. How does that impact the inflation part of this story?
Well, we will see. I mean, if they're spending, then that means there's some they have purchasing power, and the companies that are selling through the goods or services also have some pricing power. So I think that's part of what may be happening on the inflation side of things. It also wouldn't surprise us that the Atlanta GDP now this morning updated to 3.2% for the fourth quarter for current GDP expectations. That's up from about 2.7% a week ago. So based on the win by Trump and the Republicans a month ago, we might see some buying that is pulling forward some later Q1 or Q2 buying where customers have money in their wallets now. They're not really sure what tariffs are going to do to goods or things that they may buy, and so we might have kind of a ramp up into the holidays beyond the normal holiday spending, where people are kind of buying things expecting some of that inflation stuff to come through attached to tariffs. So we will see.
Of course, end of the year is always a time, especially December, for people to reflect, take stock, and of course, set themselves up for success in the new year. The new year will bring a new administration, and with stocks at record highs, Michael, what would you advise your clients in terms of looking at the stock market and considering potentially adding allocations to equities?
Yes. We're not afraid of adding to our allocations with additional capital, but we're also not recommending dramatic overweights to equities. In fact, equities are fairly expensive here based on a kind of a norm or an average type of valuation. It doesn't mean there aren't opportunities, and if you're going to hold stocks for 3, 5, certainly 10 years, that adding to that allocation would be fine. The cheaper asset class, looking back in recent history, continues to be bonds. And so the Fed started lowering rates, 2 or 3 months ago, and the long bond, the 10-year bond, is actually the yield is up. So that means price is down. So the cheaper asset class continues to be fixed income, and we've really been encouraging clients for the better part of 2 years now. When we've got 4%, 4.5% on the 10-year, and we're able to get corporate debt or bonds in the 5% range, we want clients to have a full allocation to that side of their portfolio as well. And that really hasn't been the case for the last 15 plus years, where we've been overweight equities, underweight fixed income. We're in kind of an equal weight posture to both of those right now.
Mm-hmm. How do you anticipate that a new administration, Michael, will impact the outlook?
Well, I think the big question mark is who and when and to what degree would tariffs potentially impact businesses and consumers? And I think there was a big kind of overhang leading up to the election around tax policy. I think that's kind of moved to the back burner now with the win by Trump. And the expectation is that corporations will have at least the current tax regime for the foreseeable future. So that helps the earnings picture. The question mark will be the tariffs, and it's really hard to gauge or to guesstimate what that's going to look like without some meat on the bone from the administration. So we're in kind of a wait and see mode.
Michael Muscio, president at FBB Capital Partners. Michael's going to rejoin me after the market opens. Michael, thank you. All right, today is Giving Tuesday, and coming up, we'll speak with one of the directors behind the campaign and what is in store this year. Stay with us.
So now, Eric, this year, GIC is celebrating 40 years in the United States. What has this journey looked like for you?
We are so proud to be celebrating our 40th year in the US. In 1984, we opened up a small fixed income trading shop here. And the idea was we were a global investor, but we wanted to be local. And we thought it was really important to meet your partners in the market, get to understand the trends, and be there with the businesses that you're invested in. So we opened up our first office in what we thought was the most important market, the United States. We opened up an office 2 years later in San Francisco. And amazingly now, even 40 years later, we've got 11 offices around the world, and these are still combined our two biggest offices in the world. Along the way, we've also diversified what we do. So I mentioned we started with fixed income investing, but now all of our asset classes are invested here. So public markets like fixed income, public equities, our hedge funds business, but also our private markets, our private equity team, our infrastructure team, our real estate team. And the US has continued to grow in importance as a part of the portfolio, so it's now almost 40% of the overall exposure.
Now, Eric, tell me, what opportunities are you seeing in today's market?
Well, we always say prepare, don't predict. We do believe as investors and long-term investors that you want to be diversified. So if you look at our portfolio, it's globally diversified. It's also diversified across asset classes, but we do like to look for long secular themes. And so two that we are interested in are digitization. So we've seen a long tailwind on technology, and in particular in the US, which has been a real market leader for the last 20 years. We believe AI is a really revolutionary technology, and we're investing in that space in a series of ways. A second would also be decarbonization. We do think the planet is getting warmer, and so there will be significant capital invested against mitigating that. And so over the next decade or two, we do think this is a huge opportunity for firms like GIC that are really focused on investing in these long-term projects, providing long-term solutions.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. We teased it at the top. Today is Giving Tuesday, and my colleague Trinity Chavez has more. Hi, Trinity.
Hey, Kristen, good morning. That's right. Giving Tuesday is proving that its generosity is thriving even in tough times. After breaking records with $3.1 billion in donations in the U.S. just alone last year, and with more than 34 million Americans participating, it's clear this global movement has become a cornerstone of charitable giving. Joining us now to discuss the impact, the data, and what's ahead for this year's campaign is Celeste Flores. She is the director of U.S. and Canada Hub for Giving Tuesday. Thanks for joining us, Celeste.
Oh, thank you for having me, Trinity.
As I mentioned in the intro, giving in the U.S. alone totaled in at more than $3.1 billion last year, an increase from 2022. So why do these numbers, exactly what do they say about the resilience and generosity of donors, even in challenging times?
I think that you hit the nail on the head. It is about people coming together and the sense of community. And it does continue to grow. You know, Giving Tuesday started 12 years ago as a hashtag and just the notion of doing something good. And that has grown in 12 years to 106 countries and continues to grow just in the US, as you said, 3.1 billion. And that's just what's transacted online during the day, that 24 hours. So what we also see is that it's a kickoff to what is giving season. Rest of the season, the rest of the year is an important time for nonprofit community who are raising funds for important programs locally. But it grows because it's the notion that anyone can give and everyone has the ability to give. While that number is impressive from a dollar perspective, as you said, there are millions and millions of people who are participating in ways that are meaningful to them. So that's donation of goods, donation of time, donation of voice and advocacy. And those things are just as important. And what all that does together, this collective giving day, is that your $10 with someone else's $10 makes a really big impact. And that's how we're seeing the day continue to grow, is that everyone sees themselves as having the ability to give.
And Celeste, you're absolutely right. Millions of people from around the world participate. Specifically here in the U.S., more than 34 million people participate in Giving Tuesday. How has that movement managed to sustain and grow this level of engagement year after year?
Well, you know, I think it takes a lot of actors and a lot of people and stakeholders, and I think it you know, for one thing, time makes things grow. But I think here in the U.S. specifically, we have hundreds and hundreds of community leaders. That's what we call them, hand raisers, people in their communities who are building community-wide efforts in their local city, town, states, or for a particular cause or other community that they belong to. They are building something that is collective, that gives everyone the opportunity to give. And we see more and more of those leaders standing up each year to say, we want to build something for our community. And I think that that is an important notion to hang on to during tough times, during good times. It is about community and it is about coming together. But more importantly, it's about leaders in their community saying, hey, we really want to increase generosity in our community. We're going to use Giving Tuesday as this kind of collective moment. But what we hope is that Giving Tuesday is just an anniversary and people are giving throughout the year and making it a lifestyle and a behavior, and then telling their friends and inspiring their friends and their families and their coworkers to continue to find things that are meaningful to them in ways to give back. But I would say community, I would say growing needs, unfortunately, in many areas. And then just the idea of collective giving. People who give during Giving Tuesday are giving because they love the idea of giving together. So that is why it continues to grow, and it continues to grow for organizations because of the needs of the organizations. Their wait lists grow.
And speaking of growth and really building on that community, with Giving Tuesday now hosted in around, I think, 100 countries, how do you tailor the movement to resonate with diverse cultures and communities around the world?
It's a really great question. Thank you for asking that, because it's really important to say that it's the local leader. We in each of those countries, we have a country leader, and they are engaging stakeholders in their country to take this notion of a day to do good, make it their own within their relevant culture, ways that they give, traditions and ways that they give, and I mean, in many places, it's not, the language is so different, the giving culture is different, the way that people collectively come together in community is different. But it's those local leaders and coming together to make something that is relevant in those areas. So a lot of places, it's not called Giving Tuesday. It's in a totally different language, or it's in a phrase that is more meaningful than a Giving Tuesday in English in the US would mean in those countries.
And Celeste, the goal of Giving Tuesday is to bring the world together, as you said, through acts of giving. How do you measure the success of that mission beyond the impressive financial contributions?
That's a really great question. One, I think there's a lot of different ways, and what is success? Obviously, there's that binary way where we can count money that's donated online, and that's just in the US. We're working with other countries who don't have as robust of a gathering system on those dollars to figure out those dollars. But we have a lot of surveying. Our leaders are capturing data as well, not only financial, but how many people are coming and doing activities, donating time, donating goods. And then also the stories. And so it takes a lot, a village, if you will, a global village, to bring all of that data together to understand the impact. And it's not just on that day, it's the impact that happens the rest of the year. And like I said, a lot of our country leaders are doing this around. There are 52 Tuesdays. So what is success and what is impact is far past the 24 hours of Giving Tuesday.
Thank you so much for all of that important information, Celeste Flores, Director of U.S. and Canada Hub for Giving Tuesday. Now, coming up, this holiday season is already shattering records across the retail sector. So stay tuned for more details.
Fiserv serves fundamentally every American household, largest payment processor and largest fintech in the world.
I do want to talk about Fiserv's third quarter report. It was showing significant growth, and especially when it comes to merchant solutions. Can you talk to me about what you think is fueling this growth and how you expect to continue that momentum?
We had 28% revenue growth in Clover. Our regions outside the U.S. also are growing very, very strong. Our commitment to small business, our commitment to innovation, along with our e-commerce capabilities. So, you know, being able to serve every household across the U.S. and then in multiple countries has given us great geographic diversity and given us great capability from the largest retailers to the smallest pizzeria.
And you actually just recently announced your collaboration, your partnership rather, with DoorDash on the Crimson program. Can you talk to us more about that and why this is such a significant milestone for Fiserv?
So what we did was create a solution set for DoorDash that allows them to be able to bring a better experience to their drivers, the Dashers. And it's really an integrated approach. It's using a series of products we have. We brought a couple of partners in, both in banking and in some other expertise, but ultimately it's our core product set.
How will this help kickstart Fiserv's expansion into other sectors?
Well, I think in fact it is an opportunity to show how we sit at the intersection of banking and merchant. You know, we are the only property that can sit at that intersection, that we could deliver payment processing, Clover, to a bank.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Early returns from Black Friday and Cyber Monday signal that we are in for a historic holiday shopping season. In fact, early this morning, Adobe Analytics disclosed to NYSE TV that consumers spent a total of $13.3 billion on Cyber Monday. That was up 7.3% from the same time a year ago and did surpass Adobe's initial estimate of $13.2 billion. Well, in the peak hours of 8 to 10 p.m., consumers spent $15.8 million every minute. Joining me now to break down the numbers is Taylor Scherner, Senior Director of Adobe Digital Insights. Taylor, thank you so much for joining. And clearly shoppers were in a buying mood. What were they buying?
Clearly, it was a race to the holiday season here as we come to December 2nd, and shoppers were seeing amazing deals on computers, on toys. They were buying video games, they were buying handheld video game devices, they were buying electric scooters for their kids and for themselves. I myself bought a bunch of board games over the weekend, which is interestingly a hot selling item. A lot of families picking those up headed into the holiday season as we all race through the next 3 weeks to get gifts under the tree or wherever they go.
What were some of the biggest deals, Taylor, that you were witnessing over the course of Cyber Monday?
Well, we took a look at billions of transactions. We look at hundreds of millions of products. And we look across massive categories of business. And one of the things that we see is that if, for instance, you were buying a computer yesterday, you were probably paying about 30% less for that computer than you would have paid at the beginning of, say, October. So there's some enormous deals there. Apparel also was one of the biggest discount categories that we saw. People buying shoes and clothes and jackets as the temperature finally turns down. And then obviously video game devices were a big seller going into the season, and that's where you start to see that today. As if you have not bought all of your gifts, you're going to see some of the deepest discounts in electronics and other categories as you go into today and through the season.
Do you expect spending to continue, Taylor? And if people weren't able to take advantage of Cyber Monday and Black Friday, can they anticipate more deals?
Gosh, I hope so, because I certainly don't have everything bought yet. Yes. So we expect spending to continue apace as we go through what is a short season between Thanksgiving and the holiday season. And we expect people to be able to continue to find deals. You just have to look a little harder. You have to follow your emails. You have to look for the specific item that you need or your loved one needs or your friends or family are looking for, and track that down and keep an eye on it. In fact, one of the things that people are increasingly using right now are AI assistants to try and figure some of that stuff out. We've seen about a 20 times increase in the use of Gen AI shopping assistants going into this year. So people are making use of whatever they can to make sure they get the deals over this holiday season.
How are you finding that Gen AI and those shopping assistants that you mentioned, Taylor, are aiding in the shopping process?
Well, they hit a number of layers of the shopping process. I think any of us who are shopping, even for ourselves, but certainly for loved ones, ideation, thinking about what it is that's going to be interesting is a big assist for Gen AI, but also location and pricing. So they're finding where these items might be and where they might have some of the better pricing or other bundling or shipping deals that are available. So they're doing a lot. We don't see a lot of people using them, but we see an increasing number picking them up.
Hard to turn down a deal, that's for sure. But of course, we know credit card debt also near or at a record high. How have you seen the popularity of buy now, pay later take part in these shopping holidays?
So we have, in previous years, we've seen sort of a skyrocketing of buy now, pay later behavior, which is, going to a website, you see the little button at the end, and you can pay in, say, 4 monthly payments or over a period of time. What we've seen is that people are increasingly using that service, but they've spread their financial instruments around, so that they're also using credit cards and debit cards and other means, so that it isn't on quite the skyrocketing path that it was, but it is still an increasing area of interest for consumers, especially younger consumers and consumers who are, looking to spread some payments across time.
We have jobs data on tap all week long, Taylor, and of course, inflation is very much a part of this story as well. How does inflation fit into the picture of the activity that we've seen the past 5 or 6 days?
Well, we've seen a massive increase, as you mentioned, in what people are spending, $10.8 billion on Black Friday, $13.3 billion yesterday. And we went to the pricing data to figure out, are those real? Are the people buying real stuff? Goods and services, or are they? Is it inflation? And one of the interesting things is that while the broader economy has been on its own inflation trajectory, what we have seen in the digital world is that the basket of goods that people buy online have generally gotten less expensive over the course of the past 2 years or so. So that basket's about 2.93% less expensive now than it was, say, in 2022. And that has led people more and more online. So if you are already concerned about your pocketbook and you're looking for the place to start shopping, you're going to look online because that's where the cheaper products tend to be, and that's where prices are decreasing. And then especially in this season, we're seeing very high and near record discount rates in a number of categories. And so that's really attracting consumers to the online space as well.
Taylor Schreiner, thank you so much for joining, especially after a late Cyber Monday. Taylor's the Senior Director of Adobe Digital Insights.
Thank you.
All right, well, the opening bell is just moments away. Stay with us. We'll tell you more up next.
If I go back to 2021, it was really the first time in the company's history that we actually had an investor day where we showcased our first essentially 3-year strategy for the group. And it was very clear, very focused strategy. It was really about diversification, about the fact that we wanted to increase the franchise value of our reinsurance business, but we also wanted to get scale and expand on the insurance franchise. Once you have that roadmap and that vision and you have excellent people, it's amazing what you can accomplish. And I look at where we are now, 5 years later, basically. The company has more than doubled in size. Our stock has gone up over 60% over that period of time, better than the S&P. Our book value per share, which is a critical measure in insurance, is also up over 60%. And we have improved pretty much every facet of the company, from underwriting discipline to operating discipline. But one of the most important things we have done is we have created a culture of inclusion and collaboration. That's frankly what allows us to accomplish what I just discussed. One of the great things about insurance is that we have jobs for everybody, regardless of where you come from. But no, I did not think that insurance was going to be where I ended up. Mm-hmm. I had gone to the Johns Hopkins School of Advanced International Studies for my master's. I have a master's in international economics. I speak 3 languages, and I had a lot of experience in Latin America. So I thought there's got to be a multinational company out there that could use somebody with my talents. But I didn't know what industry, and I didn't care what industry at the time, to be perfectly honest. So I had applied to different companies. And the way I ended up in insurance is my older brother, who had worked for McKinsey & Company for a long time, had said, listen, AIG likes people with your background. And for me, diversification is about a few things. It's about geography. It's about line of business, so property insurance, casualty insurance, aviation, different kinds of things. It's about insurance business and a reinsurance business.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, momentarily, NYSE-listed company Vale is going to ring the opening bell. The metals and mining company, one of the world's biggest based on market value, listed on the stock exchange nearly a quarter century ago in 2000. Well, among the metals the Brazilian-based company produces are iron ore, nickel, and copper. And additionally, Vale operates large logistics systems, including railroads, maritime terminals, and ports, integrated with mining operations. Vale has expanded its global footprint since its 1942 founding and currently has more than 200,000 employees in 18 countries. Let's take a listen to the opening bell. All right, we are officially open for trade. That is Vale celebrating the opening bell with our president, Lynn Martin, up there on the podium. And as promised, I want to bring back in Michael Muscio. He's a president at FBB Capital Partners. Michael, thank you so much for rejoining here now that stocks are open. We are right at records across the board. Kind of a flattish day as investors look to be consolidating some of the recent gains. What should our viewers make of today's market action?
I think investors should expect today and probably this week until we get some of the jobs data for the market to just be digesting some of the November euphoria. The market was up, I think we're up 6% from election day. PE multiples on the market have expanded by 5%. So that's an indication, and that's not real big change to the fundamentals yet. That's just a sentiment trade where investors have been eager to buy stocks in hopes of what 2025 might bring in a changing administration. So just like after a big turkey dinner, Kristen, where we have a little bit of need to rest a little bit and take a breather, I would expect markets to be not quite as overeager in terms of their appetite for a few days here.
Yeah, after a record amount of money piled in, according to the data, 2 in the 4 weeks during November, the most that we've seen in a consistent 4-week period, more than $140 billion just for U.S. equities, according to that global data. Michael, I do want to talk a bit more about the policies of the incoming administration and how companies are adapting. We've seen some reports, some expectations that companies, even consumers perhaps, are buying before in order to avoid potential tariffs down the road. Is that an expectation that you see, and how might that impact earnings and growth in the new year?
Yeah, I think, again, we'll go micro and macro. At the micro level, I think consumers, the Muscio household did their part both on Black Friday and Cyber Monday in terms of but not just thinking about the holiday and what's coming up for normal holiday purchasing, but while there are deals, while there are sales, is there something maybe in the first quarter that we would be looking at buying, and we've accelerated that a bit. My expectation is we won't be doing the same purchases in the first quarter, but you never know. I've got a couple teenagers and their wardrobe seems to adjust weekly. On the macro level, I think for businesses, you've seen with some of the earnings that have come out, for example, from Target, which is not a company we own, but one that we follow a bit, where they had been kind of trying to get things in and on the store shelves and stocking things that they thought in advance of anything that might be shifting. So what you could see from companies or businesses is, would Lowe's be, buying more lumber in advance of potential tariffs or things that come from overseas like appliances? So you could see inventory stores go up, right? And cash levels go down of businesses. And again, we'll get indications on this stuff, Chris, and probably, as earnings for the fourth quarter really start to come out, which would be 2 or 3 weeks, like right within a week, plus or minus, of the inauguration.
So we'll be following that data closely, Michael. Anything else on your radar in terms of sectors that you expect perhaps to see an outsized impact here in the wake of a new administration?
Yeah, so in general, sectors with greater regulation, I think, I mentioned the market's up 6. I think banking stocks are up about 10%, right? So sectors that have higher degrees of regulation in a Republican administration are set to probably do a little bit better. So I would think of financials, I would think of energy, perhaps healthcare. There's some other things going on there with Medicare and Medicaid specifically. So that would be the expectation, but I would just remind everybody that a lot of times these expectations don't actually break the way we would expect. During the Trump administration, energy was actually the worst performing sector because that ended on COVID when oil dropped below like a negative number in that May of 2020. It was actually the best performing sector during the Biden administration. And that is very counterintuitive for most investors, particularly when you're thinking of regulation and ease of doing business for companies. But I think the banking sector, I think financials are interesting here. And they, on average, are trading, particularly banks, below the market multiple.
I'm Michael Musia, president at FBB Capital Partners. Michael, thanks so much for the double whammy getting your take on markets today.
Thanks for having me.
We do have some sad news here to share at the stock exchange. Yesterday, Art Cashin, UBS's director of floor operations at the New York Stock Exchange, died at the age of 83 years old. Cashin's legacy at the exchange goes back decades. His daily market commentary, Cashin's Comments, was distributed to clients continuously for more than 40 years. And every year on Christmas Eve and New Year's Eve, he led the singing of the 1905 song, Wait Till the Sun Shines, Nellie. Certainly a fixture here at the exchange, and I had the honor of working with Art over the past 13 years that I've been at the exchange. His kindness, historical perspective, and willingness to help others will be greatly missed.
And you're here at the New York Stock Exchange for our annual Space Summit. This is your first year attending. Talk to me about why it was important for you to attend.
For decades, space was not really talked about, and particularly in the world of investing and early stage investing, it was not a smart investment to make. It was not, viewed as salient or viable given the long time horizons, the capital intensity, and that is all changing. So all of the work that the industry has been doing behind those closed doors, behind the curtain, is now coming to fruition. And so the best time to make these investments, especially in early stage, is just before something is about to happen and having that timing exactly right. And so that timing is now.
Talk to me about, from your standpoint, the criteria in which you consider before deciding who you want to invest in.
The fact of the matter is 776 is a generalist firm. And so this is not our deep area of expertise. We are an inch deep, a mile wide across different sectors, which is a beautiful position to be in, to really understand how all of these economies fit together. And for me, the interesting thing about space is that they're actually creating their own new economy. And so the in-space economy for me is wildly fascinating. And the opportunity, from an investment perspective is massive. And the opportunity and the capabilities that this is going to breed for us here on Earth, for humanity, the human side of this is absolutely fascinating for me. And so we typically make one moonshot investment per fund. And so we're relatively new to the space as investors, to the sector, I should say.
Yeah,
the sector of space, yes. and so I'm really here to learn. I'm here to understand what people are talking about, where the industry movers and shakers are. But the deeper I get into this, the more and more obsessed I've become.
And where would you say the different areas in space are you targeting right now?
There's a lot of
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, the 101st NYSE tree lighting is just 2 days away. And in addition to an afternoon full of performances and activations spanning Wall and Broad Streets, more than 450 companies will be participating in the NYSE Global Giving Campaign. My colleague Trinity Chavez is on the floor with more. Hi, Trinity.
Hey, Kristen, that's right. So NYSE Mamas Give Back is a nonprofit making a very big impact, providing essentials and support to pregnant women, new moms, and young children facing homelessness and poverty across New York City. Joining us now to share more about their important work and how we can all get involved is Sylvia Rutherford. She is the Executive Director of NYSE Mamas Give Back. Good morning, Sylvia.
Good morning. Nice to meet you. Thank you for having me today.
Absolutely. And I do want to talk to you about some staggering stats. So according to your organization, 1 in 2 families in the U.S. are struggling with a diaper need. How does your organization go about bridging that gap and helping families across New York City?
Sure. Well, we work with families and organizations around New York City to collect the diapers and then distribute them to all the different organizations, hospitals, homeless shelters, early childhood programs, anywhere where you might find a family in need that might not be able to have diapers for their children.
And how does addressing diaper need in families regain stability and opportunities when it comes specifically to this, especially because 1 in 4 parents, they miss work because not having diapers for their child, and it's not provided in childcare.
That's right. So in order to send your child to childcare, you must, supply the diapers. And so when families cannot supply those diapers to the daycare centers, then they stay home with the child, then they miss work, and then it just perpetuates that cycle of poverty that we're trying to close the gap on.
And talk to me more about how right now there are no federal programs that actually go about supporting, providing diapers. They don't even cover the cost of families who have to come up with that extra expenditure to be able to fill that gap.
Yeah, well, when you think about, families with low income who might qualify for a SNAP program or a WIC program, those are nutrition programs. And so they are focusing on getting food for the babies, but they're not focusing on diapers. And so those costs are coming out of pocket for these families.
Talk to me about some of the policy changes that you would like to see personally to help address this growing need.
Well, of course. I mean, I think that diapers are a necessity. They're not, something that we just hope to have. They're something that all children and young babies, need. And so I do think that that diapers should be included in these programs.
And for Giving Tuesday, you're encouraging people to send a pack of diapers. Talk to me more about this.
Yes. So, on Giving Tuesday, I know a lot of people are going to be getting a lot of emails today asking for donations. And our email is not going to ask for monetary donation. We're going to ask everybody to send us a pack of diapers. You can find our wish list on our website, and those diapers will get distributed very swiftly during the holiday season.
And talk to me more about your involvement with the NYSE and how institutions like this is helping get the word out for such a critical issue.
Well, we've been so proud to partner with the NYSE this holiday season. There's a big drive going on here right now, and I'm really excited to get our name out there and hopefully get some more, diapers and toys and clothing to the families this season.
But beyond donations, how can individuals and communities work toward a more sustainable and address more sustainable solutions when it comes to this growing need?
Oh gosh, that's a tough one. One thing that our organization really focuses on is reusing items. And so we are one of the few organizations that does collect gently used items, whether it's clothing or other supplies. And so we are happy to provide that service to New York families so that when they have outgrown things that are perfectly reusable, we can pass them along to families in need.
Thank you so much, Sylvia, for joining us today again. That's Sylvia Rutherford. She is Executive Director of NYSE Mamas Give Back. Thank you.
Thank you.
Now coming up, new insights into the auto sector arrived today, so stick around for those details.
So, Chris, tell me about the MLS Innovation Lab program and what it means for Major League Soccer.
So we launched Innovation Lab last year because, MLS has always been at the very forefront of innovation. We were one of the first leagues in the world to launch automated review. We, have our global media partnership with Apple, but we never had a formal innovation program. And so we thought this would be a great opportunity for us to take all the energy from our league, our clubs, our youth leagues, and centralize it and build one central program that we call the Innovation Lab. We see hundreds and hundreds of companies apply every year, and we select the best 6 or 8 to work with us on a 9-month program where they get to really test and try out their technologies. We get to spend time with amazing young founders And together we get to build the future of sport in North America.
Now, when it comes to evaluating companies to invite to participate in the program and for MLS to potentially invest in, what are you looking for?
Of course, it always starts with what's the idea? Does this founder have something we think is compelling that we can actually use in MLS or in one of our academies? And so that's the starting point. What's the technology? What's the product? And is it interesting to us? And then we do all of the normal things. We spend time with the founding team. We understand, what their vision is, who they are as people. Finances of the company, of course, matter. And then we evaluate all of that, and we go through a deep screening process, lots of cuts, and then come up with the final couple companies.
And tell me, what have been the biggest learnings so far from the MLS Innovation Lab? And personally, what have you enjoyed the most?
So the best is spending time with founders. I mean, you get to do it every day. The energy that startup founders bring is just incredible. Their ingenuity, their drive, their passion. I would highly recommend for any CEO, any executive, to go get out of your office and go spend time in the startup world and bring some of that energy back to your company.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio. Well, we are off to the races. The stock market has been open for about 15 minutes now after Vale rang the opening bells you see behind me. Here is a live look as to how the Dow is faring, just down about 0.2%. Stocks really taking a breather after what has been a record run for equities. Of course, a post-election surge really taking stocks higher, as well as continued earnings and economic growth. And this week, as we've been covering on the show, the jobs data will be in keen focus, and that's because jobs is part of the Fed's dual mandate, jobs and inflation. That's, of course, what steers its interest rate decisions or where it sees borrowing costs going. That impacts our mortgage rates and, of course, the rates that we get on credit cards. While many Americans are shopping for a new smartphone or perhaps some jewelry this holiday season, some might be thinking bigger, like a new car. Well, new insights on new vehicle sales in the U.S. arrived today, and they're projected to have risen by about 7% in November from a year earlier. Joining me now is Lauren Fick. She's a founder of Car Coach Reports. Lauren, great to have you on the show here. Retail is everything that we've been talking about for about the past week or so. What are your expectations when it comes to car sales?
Well, we're looking about November sales being up about 7 to 11%. Part of that is you had an extra selling day, but also there's a lot of incentives and a lot of inventory, which means consumers have a lot of choices. And at the end of the year, this is a great time to buy, especially as we know there's going to be a lot of changes with the new administration coming in.
So what are some of the changes that you expect could impact the car market?
Well, we do know that $7,500 tax credit's going to go away. Even Elon Musk, who's working with President Trump, has said this is something that they're planning on removing. That also helps him, believe it or not. If you're thinking, well, what about all those electric cars? Well, car manufacturers are actually asking to leave in that tax credit and take away the mandate because they want to sell the vehicles that they've produced. But for Elon Musk, he's blazed the trail and still owns about 60% of the electric vehicle market. And electric vehicle sales are still strong. They're not what they were hoping they would be, but hybrids are where people are tending to go to. They want the electric for running around town, but when you go on a highway, they don't want to have to rent or purchase a second car. And so this is like the best of both worlds, whether it be a plug-in hybrid or a regular hybrid. And it's, of course, the cost of fuel is going to make a big factor on what people decide, because gasoline-powered vehicles will always be available as well.
We've seen some shakeups when it comes to the executive level at car companies, namely Stellantis. What do we know about that, Lauren?
Well, that is interesting. Tavares had said that he is going to double down on all electric, where literally every other brand except for Jaguar has said, no, we're going to coexist. Like General Motors says, we're going to offer electric for those who want it, and gasoline are the only car company that has said they're going to have two versions, where Hyundai and Kia, who are leading the trail in sales so far for November, we don't have all the numbers in yet, they're offering hybrids as well, offering people options. You want a plug-in hybrid, or do you want just a hybrid so you can go distances? And so this offers people good choices. We're seeing with Stellantis is they get rid of all their performance products, which is what people purchase, the Hellcat, the Demon, the Hemi engines. And then they only offer one vehicle on the Fiat lineup, which is here in the US, which my prediction is that's going to leave the US because they only have the 500E, while dealers still have the 500X, which is their all-wheel drive subcompact. Great deals, by the way, sitting on their lots because they can't get rid of them. And you're seeing that along the full Stellantis lineup. Where it comes to Chrysler, one product, they just added on the Voyager, so you have a minivan, and one is stripped down and one is loaded. So you're really limiting options to consumers. And when you're a leader of a car company, you need to read your buyer. You're building cars for your customers. And if you're not looking at what the customer wants, you're just building what you think is right, that's a problem, which is why he stepped down on Sunday night.
I'm curious in terms of auto sales, Lauren, as we prepare for these numbers to be released, how you think that another rate cut by the Fed, of course, traders pricing in a more than 70% chance of another quarter percentage point rate cut in mid-December, will happen. Of course, that would impact the rate that someone could get on a loan to buy a vehicle. How do you expect that that could impact auto sales ahead?
It should help auto sales a little bit. I think that what we need to do is lower overall costs. Insurance rates are up about 60%. So that's a big factor for a lot of customers. You're thinking, well, I was going to buy that loaded vehicle. Maybe I'll buy that mid-level loaded vehicle. But keep in mind, there's cars sitting on lots 3, 4, 500, 600, even 700 days of inventory. That's more than a year. So that's good for the consumer, which means there's products available. Incentives are out there, which is good for sales as well. And I think in the bottom line, you're going to see sales increase. I am, however, worried about certain brands that have not maybe transitioned and been able to step away from the electric car manufacturers, such as Jaguar and Nissan. Both are struggling, as well as Stellantis. They need to sell more cars. Consumers should know that there are great deals, but without incentives and lower interest rates and lower insurance costs, I think that's going to be a big factor to consider.
Lauren, very quickly, how do the incentives this time of year compare to what we saw last year?
Oh, much better. We had inventory issues. Now we have inventory. So if you're thinking, well, I was waiting on that minivan, that truck, that SUV, whatever it might be, go to the dealers, shop around. It's good to buy local, help the local dealers. But keep in mind, a lot of people are buying online, and you're going to find that interest rates and inventories and incentives are all going to be very helpful. And we're hoping for a good December.
Lauren Fix, founder of Car Coach Reports. Lauren, great to see you. Thank you.
Thank you.
Earlier this fall, Trinity Chavez covered the biggest stories in the financial technology world at Money 2020 in her hometown of Las Vegas. She sat down with Roger Desai, the CEO of software identity platform Prove. Take a look.
We're at the point where most of our lives are lived online, and the way the digital economy can thrive is that we have trust and confidence in interacting with people, businesses, buying things, selling things. And so what Prove does is make sure people are who they claim to be.
Talk to me about how your identity verification differs from what's currently on the market, what your competitors currently have.
The current way things are done is a very outdated model where we kind of predict the next transaction being good or bad based on whether you've done it in the past. We're headed to a world where things have to be cryptographically authenticated, which is a fancy term, but I think in a world where AI is making it easy to impersonate anyone, we're just losing confidence in interacting with things. And so Prove's role is to try to authenticate things deterministically, so we know that this piece of content or this person or this business are really who they claim to be.
How is that really enhancing the whole user experience?
As it becomes easier and cheaper to defraud things, there's more and more friction, so it just becomes harder to do things. But there's actually a second order impact that I think is even more striking, which is as businesses fortify themselves, now attackers are trying to scam us into doing things, essentially authorizing the fraud. So who would have thought that adopting a puppy online or going on a date would lead to billions of dollars of bank losses? So it's moved to a whole nother realm where we're being convinced as consumers to participate in scams. And I think what's really required is this kind of circle of trust, is what we call it at Prove, that when you're interacting with another party, imagine they had a visual cue like a check mark, and that user or that piece of content was verified. Like, you don't know necessarily who it is, but you know that they've been verified behind the scenes. Those types of things will be necessary for us to really trust interacting with folks online.
Walk me through exactly how you go about doing this. What are some of the key tools that you utilize to be able to differentiate the difference between an actual legitimate user versus a bad actor?
The thing that Prove did differently from the start, we leveraged the way just phones work. So if you think about your phone rings wherever you are in the world. You can make a call anywhere in the world. It really relies upon your SIM card kind of acting as your proxy. So that's a new way to think about things, that I think everything will have to be essentially signed and authenticated, and things like SIM cards or passkeys. We introduced something recently with a partner called AirKey. These keys are going to be the future. because you can essentially bind identities to keys. If you can authenticate the key, you know it's that person. So the days of scanning a passport, putting it on a cloud server that could be hacked, I think now you'll find math and cryptology kind of lending a hand, and maybe my face is scanned, but it becomes a mathematical array. If you were to steal it, you wouldn't know who I am. So I think you're going to see the combination of cryptographic keys, SIM keys, pass keys, air keys, combined with privacy-preserving biometrics. The combination will be very strong and allow for a frictionless experience.
Well, thank you for joining me today.
Thank you so much.
Trinity joins me now. Trinity, such an important conversation, especially around the holidays and Cyber Monday. How prevalent is fraud in the era of AI?
This is absolutely a growing concern, Kristen, especially when it comes to synthetic identity fraud. A recent survey found that 88% of experts see it as a serious threat, and nearly half dealt with it firsthand. So to fight back, businesses are pouring resources into security measures like CAPTCHA tests and large-scale systems to protect their platform and their users. But there's a problem. Users say that those security steps often create more headaches for the customer. So think about how many hoops that you really have to jump through just to create an account or a login somewhere. So it can be very, very frustrating for the end user, and many people give up altogether. But the real challenge for businesses is now how to find that sweet spot, keeping fraud at bay without making the experience so difficult that they lose their customers in the process. And of course, in the era of AI, it has empowered fraudsters to really embrace the new sophisticated tactics that are increasingly targeting businesses, managing user data and other transactions, Kristen.
So Trinity, how should organizations approach protecting customer and user identities here?
Well, especially without headache, that could be a challenge because it's definitely a balancing act. Some industry experts believe that businesses need to focus on identity verification at every stage. So from signing up to making transactions and staying compliant. But in the stage of AI, traditional methods like image-based authentication just doesn't work anymore, and it's too easy for deepfakes to fool the user. So to stay ahead of that, AI-driven fraud without making things harder for customers, modern tools like the Link SDK could really be beneficial. So it simplifies identity verification with seamless APIs and so much more. But you know, this is just one of the many things that are currently on the market to help businesses stay ahead of that rapid development of AI and technology that we're seeing today, Kristen.
Trinity Chavez, great to get your take, of course. We got the tree lighting coming up, and
Yes.
you and I got to start preparing that. A big day here at the Exchange kicks off at 3 o'clock on Thursday. Thank you, everyone, for watching. For Trinity Chavez, Kristen Scholler here at the NYSE. We'll see you tomorrow morning.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.